Welcome back from that short break, and welcome back to the Financial Markets Show, your day-to-day program that gives you direct insights on what's happening in the various financial markets out there. It's me, Gloria, together with
Victor.
Now, looking at back to African Dawn Capital, which has undergone significant changes and challenges over this year. If we look at its recent stock performance, actually, they've been quite having a roller coaster ride. While they have gained a 50% increase in the year the past week, they've also lost 40% when it comes to a year-to-date performance. So these figures actually highlight the volatility in their stock price.
So volatility is indeed the name of the game, and especially for a company like Afton. So I wonder what might be behind these recent price fluctuations and what the future holds for their stock.
Well, that's something we all need to explore, Victor. So understanding the drivers behind this volatility can actually provide valuable insights for both investors and various analysts out there.
Yes, and actually we shouldn't forget to compare Afton's performance with its peers in the Johannesburg Securities Exchange, and how do they measure up against other companies in the South African market?
Exactly. This comparison, Victor, could actually shed more light on their relative standing performance and about getting the bigger picture here. So what do you have for us?
Well, shifting focus particularly on primary healthcare.
Wasn't primary healthcare among our losers today, though?
Yes, choosing to start with losers today because losers actually, it is just a daily trading session.
Like we said, a daily fluctuation.
Indeed, but the performance as per year to date, as per the previous week, can be quite valuable, and it can give you a heads up on what could happen within the next hours. I'm just saying.
Yeah, and looking at primary health properties, has actually been part of the London Stock Exchange since 1998 and has created consistent returns for shareholders over the years. So it's quite fascinating to see how they've managed to achieve 27 years of consistent dividend growth.
It is indeed remarkable, and I think one of the key takeaways here is a stability that they offer to their investors through a combination of rental growth and capital appreciation. So consistency can be quite attractive in the world of investments.
That's right, Victor, and it's not just about being on the London Stock Exchange, but it's also part of the JSE 250 index, which is a significant achievement for the company.
A noteworthy achievement, and it's a testament to their performance in the healthcare property sector. So they're clearly a major player.
And it's not about UK, it's also in Africa, especially South Africa. They have this secondary listing on the Johannesburg Stock Exchange, and which is relatively a significant development for the company. It's not worth exploring the reasons behind this expansion in the South African market.
Absolutely. So actually, Gloria, let's not forget about the numbers. Primary healthcare properties has a substantial portfolio of healthcare assets, and they're valued at about 2.8 billion euros. So this is generating impressive rental income, and it's interesting to see how these assets actually contribute to their financial performance.
No doubt, Victor, and considering they've just joined the Johannesburg Stock Exchange, I'm keen to understand how this new listing has impacted their share price and their market performance.
And what a time to talk about their performance. We actually see an 11.7% drop in their share price just from the last trading day. So it would actually be fascinating to investigate the reasons behind this sudden decline.
Absolutely, Victor. This decline actually contrasts of their IPO price, which was around 50 rands, and they have lost a significant portion of their market value since then. So this actually raises questions on what could be driving this trend in their market.
Moreover, they faced a 47% drop in their share price over the past year. So it's not just about the short-term fluctuations. There is actually, they seem to be a long-term factor playing in this situation?
And that's quite a significant drop, Victor. And understanding why such a decline is happening can provide valuable insights for the investors out there and the broader financial market at large.
Indeed. So let's not forget to look at the recent trading volume, and a lot of shares are changing hands, and it's intriguing to explore who is actually buying and selling their stock.
Exactly. Well, thank you for those insights. That's a wrap-up summary from the South Africa or the JSE Stock Exchange. Now allow us to move to West Africa, to the Nigeria Stock Exchange, and see how it moved on as of our last previous trading day. What do you have for us, Victor?
Well, it's actually exciting to get to speak about, to get to discuss the Nigerian Stock Exchange and their achievements. It's actually a really developed stock exchange, and their strategies on investment and future handling of stocks are actually noteworthy. But diving straight into the numbers of the previous trading day, we're seeing highlights of a total volume of shares that were traded, and they were reaching a whopping 449,283, and that's a significant 15% improvement from the previous trading day. So investors actually seem to be quite active in the market today.
Indeed, Victor, it's actually interesting to see such movement on the volume of shares traded. And now, despite this increased trading activity, the turnover actually experienced a 29% decline. So what do you think could be driving these factors, Victor, though?
Well, that's a good question. It seems that while more shares are changing hands, the overall value of these transactions actually decreased. So it could be attributed to a shift in the type of stocks being traded, or actually perhaps some profit-taking activities in specific factors, in sectors of the economy.
Interesting. And looking at the market capitalization, we see that the Nigerian Stock Exchange is currently valued at around 38.8 trillion Nigerian naira. It's always essential to keep an eye out for these figures, and it also reflects the overall wealth and budget for these listed companies. So what thoughts could you have on this one, though?
Well, the market capitalization is a crucial indicator of the market's health and the investors' perception of the listed companies. So at 38.8 trillion naira, it actually shows the strength and the resilience of the Nigerian Stock Exchange.
Exactly. Now, turning our attention to the performance of these individual stocks, we have PZ Cushions Nigeria that led the gainers with a 10% share price appreciation, closing at around 22 Nigerian naira per share. So what do you think could have contributed to this significant price rise?
Well, Gloria, specific factors such as positive earning reports, new business developments, favorable market conditions, all these can actually be behind PZ Cushions' impressive performance. But investors are likely responding to positive signals, driving up the share price.
Interesting. And on the flip side, we have Northern Nigerian flour mills that experienced a 10% price depreciation, closing at around 18 Nigerian naira per share. So it's also unfortunate to see stocks in red. What insights could you have that could have impacted North Nigerian's performance?
Well, stock prices can be influenced by various factors. I will keep repeating that because these factors at the end of the day are the same, just different regions and different political and economic conditions. But we're looking at poor financial results for the companies itself and negative industry trends or broader economic challenges. And we're looking at investors reacting to any negative news or uncertainties surrounding Northern Nigeria flour mills.
Exactly. So moving on to our most traded stocks, though, we have FBN Holdings that actually recorded the highest volume with around 52 million traded shares. So it's actually interesting to see how the banking sector is actually maintaining prominence in terms of trading activity. Victor, what could be your take on this one?
Well, the banking sector has been a significant player in the Nigerian Stock Exchange, and FBN Holdings consolidated Hallmark Insurance Fidelity Fidelity Bank and United Bank of Africa are consistently attracting investor interest. And the stability and growth potential of these banking stocks could be the driving force behind their high trading volumes. But shifting our focus to the performance of the market indices, the Nigerian Stock Exchange All-Share Index inched up by 0.19%, closing at about 70,613.60. So this represents a one-week gain of 1.99%, a four-week gain of 5.42%, and an impressive year-to-date gain of about 37.78%. And at 37.8% actually. So Gloria, what is your personal analysis on these numbers?
Well, the positive movements in these indices actually indicate a generally a bullish market, Victor. So investors seem confident actually over the overall performance on the Nigerian Stock Exchange, with these substantial gains over the short and medium returns and terms. The year-to-date gain of 37.78% reflects the market's resilience and its ability to recover from its previous uncertainties.
Well, looking at the notable indices like the top 50 index, the top 30 index, the pension index, the consumer goods index, the premium index, and the main board index, we see positive movements across the entire board. And this actually suggests a broad-based market optimism.
Exactly. It's actually indeed encouraging to see such positive movements in the various indices, Victor. So this indicates that the market rally is actually not just confined to specific factors, but it's rather a reflection of the overall confidence on the Nigerian Stock Exchange.
Well, that actually wraps up the analysis for the Nigerian Stock Exchange. It was an eventful day for them. We're seeing notable gains and high trading volumes, as well as positive movements within the market indices. So Gloria, why don't we shift our focus to at least one of the gainers in West Africa, in the Nigerian Stock Exchange particularly?
Exactly. Looking at one of our top gainers, Victor, what could you have for us, and what would you want us to discuss in this particular time?
Yes, diving straight into one of the top gainers, we actually saw PZ Customs Nigeria.
PZ Customs Nigeria.
Yes, and actually let's go deeper into what they have going on and see, because I don't think we have ever gotten any details in any depth within PZ Customs.
Not really, actually. So what do you have for us?
Well, PZ Customs is listed on the Nigerian Stock Exchange, and it is traded under the ticker symbol PZ. And the International Securities Identification Number is all over the platform. You can go on their website and you can get it, and you continue with what you wished. But the PZ Customs Nigeria is currently the 36th most valuable stock on the Nigerian Stock Exchange, and it is boasting a market capitalization of 87.4 billion Nigerian naira. This is making about 0.225% of the Nigerian Stock Exchange equity market.
Exactly. And when we look at PZ, it actually closed its last trading day at 22 Nigerian naira per share on the Nigerian Stock Exchange. This actually recorded a 10% gain in its previous closing price of 20 Nigerian naira per share. So PZ Customs actually began the year with a share price of 11.35 Nigerian naira, and since gained a 93.8% on that share price valuation. 93% is actually a substantial figure. What do you think about that?
It is quite substantial.
Exactly, and this also ranked it the 41% on the Nigerian Stock Exchange in terms of a year-to-date performance. So this is quite a significant term coming from PZ Customs.
Indeed, and PZ Customs Nigeria is actually the 48th most traded stock on the Nigerian Stock Exchange, and that has been so over the past 3 months. But PZ actually traded a total volume of about 83.1 million shares in 3,718 deals, valued at 1.64 billion over the period. That is the Nigerian naira, but this is leaving us with an average of about 1.32 million traded traded shares per session, a volume high of 6.96 million, and this was achieved as of November 7th, and a low of 12,251 on October 25th of the same period.
Interesting. So that marks our summary from the various exchanges within Africa. But then moving on to the technology sector, we often hear about how artificial intelligence, or you could name it AI, is influencing the tech sector and actually driving stock prices. But a recent report from the bank of suggested that the AI's impact on tech stocks may actually not be significant as many think.
Well, the sector has been standing out as a performer this year, and much of that was attributed to the role of AI. But analysts at the Deutsche Bank might actually have more to the story.
Exactly. So to dig deeper into this, let's discuss the recent findings from the Gallian and Luke Templeman, who are analysts at the Deutsche Bank. Actually, they suggest that the impact of the AI on the tech rally in 2023 was actually overstated.
Well, it's actually an interesting perspective, and we know that AI has been a buzzword in the tech industry, and it's often associated with the surge in tech stocks. And however, the Bozdnikova and the Templeman present a different view.
Exactly. So one point they make is that the AI was certainly a factor in the tech sector's performance, but it may not have been the primary driver. So these guys actually argue that the tech is decoupling from the broader market this year due to its various and other factors inclusive.
So it is essential to consider that the stock market is influenced by multiple variables. While AI may play a role, it is not the sole determinant of stock performance.
Exactly. And the analysts at Deutsche Bank often provide a chart to illustrate their point. So it actually shows a measure of the abdominal returns from the tech sector compared with the rest of the market.
That's right. And according to the chart, there were several phases during the year when tech stocks outperformed the rest of the market. So these phases had more to do with market sentiment and events like the SVB sell-off than AI developments themselves.
Interesting, Victor. So in your opinion, what other factors could have influenced the market stock and these tech stocks?
Well, according to the Deutsche Bank, analysts rising according to the bank analysts, rising real yields actually played a significant role. But real yields refer to the yield on a bond minus the inflation rate. So when real yields rise, it can attract investors to fixed income securities, potentially impacting stock market performance.
So it seems that investors are actually reacting to the economic and market conditions rather than the AI news.
That's the argument.
Well,
and furthermore, the Bozdnikova and the Templeman also suggest that the different tech industries within the TMT or technology, media and telecommunication sector have started converging. So this could indicate a shift in focus from generative AI to other non-AI factors.
That's quite an interesting observation. It's actually a reminder that the tech sector is diverse and its performance is actually influenced by a wide range of factors.
So to emphasize their point, the analysts looked at the behavior of semiconductor stocks versus software and services firms. So initially, there was a surge in semiconductor stocks, largely driven by the NVIDIA after the launch of ChatGPT.
And NVIDIA's role in the semiconductor industry has been a significant one, especially as it powers AI applications. But what will happen next?
According to the analysts, the wedge between semiconductor stocks and the software and services firms has actually stabilized in the recent months. So this indicates that the initial AI-driven surge may have settled.
This is actually intriguing. It suggests that over time, the influence of AI on the stock market may have or become less pronounced.
Another interesting insight from the Deosk Bank is that while there has been much talk about AI in corporate documents, this hasn't necessarily translated to positive share price action.
Exactly, and that's quite a subscribing one, Victor. We often see companies highlighting that their AI initiatives in attempt to attract investors and demonstrate their technological processes.
Well, that's actually a point, and the analysts actually found a negative correlation between mentions of AI-related words in companies, in company documents, as well as stock returns. In other words, more AI talk didn't actually equate to a better stock performance.
Well, that's quite the opposite of what many would actually expect. So would you think that more AI enthusiasm from these companies would positively impact their stock prices?
It's worth noting that the analysts actually suggest corporate AI enthusiasm is more sticky, and while investors' attitudes actually seem to be more discerning.
Oh, so Victor, what's your takeaway from this analysis? So how might it affect investors and their strategies in the technology sector?
So according to Pozniakova and Templeman, the potential big gains in AI might not necessarily come from the public markets, but from the private markets. So they believe venture capital might play a really significant role in picking the next winners in the AI space.
Well, that's actually an intriguing perspective, Victor. It suggests that the AI is still evolving and we might not have seen the full impact of its technology in its stock market performance.
That's actually a great point, and it's important for investors to be aware of these dynamics, and the tech sector is ever changing, and staying informed about these true influences can make it a really significant difference in your investment decision making.
Exactly. Well, to wrap up, the key takeaway here is that the AI is undoubtedly a crucial component of the tech industry. That's all we know. It may not be the sole driver of the stock market performance, though. Economic conditions, market segment, and other factors play essential roles in this one too.
Indeed.
Exactly. So, well, that was our wrap-up summary concerning the technology department, and we'll be back with an interview with a guest concerning Anthony in terms of investment and what you might need to know before you invest anywhere. It's me, Nampija Gloria, together with
Victor Chiberu.
Thank you.
Smart 24, driving business.
This is Jordan. When it comes to classwork, Jordan is magic. Jordan shines. Jordan makes his peers better. Jordan is a true leader.